So welcome everybody to the final session for this semester of the investment group. I want to hand it off to Ben and Sarah to talk about the portfolio.
Thanks, Matt. So me and Ben are going to give an overview of the portfolio. And just kind of as an overview, the portfolio was established in, or the CIG fund was established in 2015, and there are currently $41,000 of assets under management. And we have 22 stocks in the portfolio, our largest holding being Lockheed Martin, which is currently 12.8% of the portfolio. And we donated $2,100 to the Colgate Student Aid Fund. So.
Do you want to go to the next slide, Matt? Thanks. So just as a tier one analysis, and there's going to be two slides kind of showing the breakdown of our holdings. But here you can see the target portfolio is where we're going to be at the end of the semester. So our target portfolio is after all of the trades that we've made this semester, and it'll be a little bit more clear in the next slide when we compare it to our benchmark. But you can see that where we started off, we had a very large, we have a large cash holding right now. FIG is very large, TMT is extraordinarily tiny. And at the end, we're much more balanced and much more aligned with the Russell 1000 index. So if you go to the next slide, Matt, here you can see there are three columns. The red column is the current portfolio. So as it stands right now, and remember, we haven't made any trades this semester. So as it is right now, the target portfolio in gray is where we're going to be at the end of the semester. And then the blue is the Russell 1000 growth index. So what we've been benchmarking to. So here you can see that the gray and blue bars are pretty similar. We're a little bit overweight in healthcare and software as a service, and a little bit underweight in some other places. But you can see we plan to have no cash holding at the end of the semester, which is super exciting, and be much more in line with where we want to be. We'll have Silicon. We won't have a huge cash holding. We want to be huge financial institutions group holding, especially since we don't have a financial institutions group. So if you want to go on to the next slide, Matt. I think you skipped one. Yep.
So our current holdings in healthcare are Viatris, Novartis, Pfizer, Alcon, and Vertex. And so kind of relative to the index, so in the graph, the red line is the Russell 1K growth healthcare industry average. So you can kind of see Alcon, which is I believe it's the pink line, or no, sorry, the blue line, was kind of right in line with the industry average, and then has started to slightly pull ahead. Pfizer, Vertex, and Novartis are all currently slightly below the industry average and are hovering around 0%. And some moves that we're going to make in the healthcare area is that we're going to sell Viatris and Alcon, and we're going to buy Quidel, which will now make up around 3% of the portfolio. And to make room for this, we're just going to trim some of our positions in Vertex, Novartis, and Pfizer. So for TMT SaaS, our current holdings are NetApp, Microsoft, Facebook, and Amazon. So once again, the red line is the TMT SaaS industry average for the Russell 1K growth index. And you can kind of see Amazon which is the pink line, has kind of done quite well in comparison to the industry average. And Facebook and Microsoft are kind of just right around the Russell industry average. NetApp was below the industry average for quite a bit, but you can see that it's kind of starting to make a comeback, and it now has positive changes. And overall, there's been positive changes in the TMT SaaS space. So the big moves that we're making in this area is that we're going to buy PayPal, which will make up 6% of the portfolio, and we're going to sell part of Facebook to kind of make room for this.
Thanks, Sarah. In the consumer discretionary space, we only pretty much hold Ulta right now, which, and I included Nike on this graph just because I know we're keeping it under consideration for something that we might look into buying in the future, or reconsider next semester. So just for reference, obviously Ulta plummeted far more than the industry did for consumer discretionary, and that's to be expected. It's a product that that most of their core competencies are products that don't function particularly well when everyone's at lockdown. So not surprising. They've made quite a bit of a comeback, but that was what happened there. And then Nike also did, and Nike's pretty much equally performed with the index since the pandemic began. This graph starts in January of 2020, so it's just interesting to see that, they're starting to underperform a little bit in the last month or two. And that's probably due to a lot of the concerns why we didn't end up choosing to buy Nike right now. So yeah, that's the consumer discretionary space. And then if you go to the next slide, it's consumer staples. And here it's a little more interesting. You can see Lowe's, which seriously dipped more than the industry did in the beginning of the pandemic. But I think it's really interesting. They've really begun to outperform since then. And, everyone knows that the housing market is hot right now. And so is home repair since everyone's stuck at home. So, it's been good to see that. We really got in at a really lucky time for Lowe's. So certainly really fortunate to have that holding. And then also Costco, which has just done consistently well, especially since stockpiling of food is no longer something that people don't really do. So, Costco has done quite well as well. And we're going to continue to hold both of those holdings, obviously. So definitely looking forward to keeping those in the portfolio and keeping an eye on them as they hopefully continue to outperform.
So for industrials, our current holding is Lockheed Martin. And Lockheed was doing quite well in comparison to the index, except it kind of started to pull back recently. So in kind of terms of moves, we're going to trim our Lockheed position. It was at 12.8%. Well, it's currently at 12.8%, and we're going to drop it down to 8% of the portfolio. And then we're going to buy an industrial ETF, which will make up 4% of the portfolio, which will then make our industrials overall 12% of the portfolio, which is right in line with the Russell index. And we're going to revisit Republic Services and Nextera next year when we kind of have more information about what price points. We like the companies, but we just don't know exactly where to enter at. So we're going to revisit those in the future. Yeah, just kind of our overall CIG portfolio. Within the last year, our portfolio has experienced a 31% return in comparison to the Russell, which that index has had a return of 51%. So we're slightly below where we would kind of want to benchmark to, but we're hoping that some of the changes that we're going to make will kind of help us in this regard.
Definitely. And I just want to also add before I talk about this slide, when we look at silicon, TMT silicon, there's not a graph for that. That does not mean we don't holding. As I mentioned before, we're going to buy a silicon ETF so that we will have that matching benchmark exposure. So, we just don't have any holdings right now. So that is why they didn't have a graphic breakdown. Awesome. So here in the bottom, we're getting a little bit of an issue with the NANs, but here's a comparison of our portfolio sectors versus the Russell 1K ETF industry averages for each of those industries. So you can see for example, our consumer staples is, or consumer discretionary has outperformed the consumer discretionary space for in the last year, at least for the Russell 1K, but in other circumstances, for example, our healthcare has underperformed pretty significantly. So, that's one of the reasons we've looked into making some changes, and we're super excited to get on board with Quidel and change around some of those holdings. But, and that it varies from, I think our two outperformers really, consumer discretionary is 75% versus, the industry being up 52%. And the same with staples, we're a little bit above with 22 versus 18. And that's in the last year. And, the last 1 day or 1 week appears to be erroring out, but that's not too much of a big deal since it's not as important of a metric. But and then for obviously software as a service, we in our historical performance, I believe there is including the ETF that we'll be holding. So for that reason, you see the the growth is pretty closely in line with the industry. I think that's the everything we have for a portfolio update. If anyone has any questions, heading into the end of the semester, feel free to ask now or reach out to Sarah or I.
Thank you, Ben. Now I want to move into just an overview of what we were able to accomplish this semester. So we were able to do a number of pitches, a number of earnings reports, and we'll get to that in a moment. But I wanted to acknowledge some of the really fantastic events outside of day-to-day operations we were able to achieve, even though we were on Zoom. I think in some regards, we were actually able to do it because of Zoom. So in the fall semester, we were able to host an educational series with 6 schools, including Colgate, and really benefit from all of each other's insights into different parts of finance, getting insight from Wesleyan on how to follow the markets and how to think like a a trading analyst, and Cornell's views on how to pitch a DCF and how to put that together. I know I learned a few Excel tricks there, so it was so valuable to get connections to our other peers at liberal arts schools and just to learn from one another in a virtual environment. We're able to kind of conclude that series with Imagining a Post-COVID Economy panel with James Swanson, Leslie Feynman, and Leroy Cody, three wonderful alumni who collectively have over 100 years of investment experience. I think it just goes to show that how fantastically connected the alumni want to stay to Colgate, who are willing to work with CIG, and who really are invested in our success. So if you haven't reached out to them or other alumni, definitely feel free going into the summer. I think people are a lot more accommodating now that we're on a Zoom world, to just take that time to chat and kind of talk to each other face to face. And then in the spring semester, we're able to continue to take action on our success from the fall and host a panel on the Wall Street Bets GameStop market event, which was really interesting. I think a great way to get the CIG name out there and to get more people interested in investing in general. And because of that, we saw some really record applications for a mid-year application process. I think, and Matt can probably attest to this, but I think we saw 50 plus applications on top of the 90 applications and acceptances we saw in the fall semester, which brought us up to I think 144 folks. Unfortunately, we don't have 144 folks on the call today. I know the finals are a little bit busy, but I just want to say thank you for attending these sessions and just growing the group and being interested in investing. I know a few other events that we had planned for this semester included the stock pitch competition, which unfortunately had an abrupt ending just due to the complications of hosting that over Zoom. I know it was really sad to see Matt and Andre and Thomas weren't able to actualize that, but I think something that going forward is something we hope to actually get done next year when we're back in person. And I want to thank Usman for hosting an educational series this last semester to get analysts prepared to go through the recruiting process for investment banking. I'm sure if you attend all of his sessions, you're going to get a job at whichever bank you want. So if you haven't gone to his sessions, definitely check those out on the YouTube channel. I can't thank Usman enough for what he's done there. So going forward, oops, my apologies. We want to just acknowledge a few star analysts. And so these are the members of the analyst class that our managers have really thought were absolutely outstanding. They've just really gone above and beyond to show their dedication to the group, provide kind of novel insights, and continue to prepare the group in the pitches and earnings calls. Matt, is there anything you want to add to this slide?
Yeah, no, just thank you to all you guys for, I don't know if all 8 analysts here are on the call, but thank you to all these analysts for putting in the hard work. I know we always see participation kind of tail off a little bit as people get more busy toward the end of the semester, but these are 8 people that kind of kept it consistent throughout, and that's really what we're looking for. So congrats to all these folks.
Which is there's 3 more that unfortunately couldn't fit on that page, and we didn't want to shrink the page down to acknowledge how these analysts are just absolutely fantastic and shrink their photo. So there's a total of 11 star analysts this semester, which is I think the most star analysts we've ever had, as long as the most groups we've ever had and the most managers we've ever had, and we just keep growing as an organization, which is fantastic. We also want to take a moment to thank the managers. There's one manager who wasn't on this list at the beginning of the semester. Caroline has stepped up, and she's now the co-manager of the Consumer Staples Group. I want to do a huge thank you to Caroline. I know we didn't get a formal introduction to Caroline in the beginning of the semester or mid-semester, but we want to just acknowledge her and say thank you for all the hard work she's done with Consumer Staples Group. You guys definitely have brought more pitches, I think, than we've ever seen in a semester before, which is fantastic. One more page of the managers. You guys probably recognize everybody now from each of the weekly meetings, and these are just some of your friendly faces you get to chat with at your weekly manager groups. So just I wanted to share some of the kind words that the managers had to say about their star analysts and just how enthusiastic they are. And it's so heartwarming to see all the nice things that I get to be said about these analysts. And I think it really applies to everybody in the group. It's just everybody is always enthusiastic and really willing to step up and be a leader where it is necessary. So thank you for that. I want to kind of conclude here with just a reflection of what we're able to accomplish this semester. So I think on this page, there's I think like 15 companies that we had earnings calls reports for. And these are just fantastic artifacts to keep track of the companies we hold, why we hold them, and just to update the thesis with the most current information. I really enjoyed reading each of the documents and just getting an update on what's happening inside of our portfolio. And every one of these reports is just so valuable in adjusting the asset allocation and keeping the group up to date and hopefully, improving our market position. With that said, we were able to purchase, and there's a mistake here, we don't have Quidel. Quidel has been added to the portfolio, but we were able to add from the TMT group, the TMT Silicon, we added a VanEck ETF. From the TMT software as a service, we're able to buy PayPal and sell Baidu. And then from the industrials waste management, we're able to add Quidel. And there's a few stocks that we know we were pitched this semester, but just because of the current market position, maybe some of the lofty valuations, it didn't really make sense to add to the portfolio yet. And I know we talked about this when Ben and Sarah gave the portfolio update, but Republic Service is definitely something we're going to keep in mind for next semester, as well as Nike and Nextera. And lastly, I just want to thank the e-board and all of the wonderful members. It really wouldn't be possible without these folks. So huge thank you to all of them. And then what I really want to end on here is sending off best wishes to all of our graduating members. So Omer, Andre, Ben, Domen, who is a junior, but she'll be going off to Cornell next semester. So wish her all the best as she transitions from Colgate into the busy New York City at Columbia. And then I will also be graduating this semester. So with that said, I want to say thank you one last time for a fantastic year and being the president for this semester and last semester. I want to just give any of the other e-board members a chance to share any of their final thoughts and just share their appreciation for the group.
Yeah, thank you guys so much. It's been a really fun, 4 years now, which is a little bit crazy, but I was really happy and proud to see what happened with the group. We've grown so much, especially since 2017, 2018, and it's just been crazy seeing how much progress in terms of the quality and of the research and the size of the group and our pitches. So something to be proud of, super exciting. And feel free to reach out in the future. I think that goes without saying to any of us. We're super happy to stay connected and go join the LinkedIn group, Instagram page, and the website also has had some absolutely amazing updates from Domen. So go check that out too. It's something to be it's really cool. But yeah, thank you so much.
Yeah, I was gonna say, JS Hope is absolutely blown away by the upward trajectory of the group in the past few years, and that would not be possible without all the hard work that you guys have been putting in recently. So, thank you for that as well.
I want to actually share the website. It's mind-bending what Domo was able to accomplish, and it looks so good. So now we have effectively a whole other research portal of earnings reports and pitches and macro updates. So if you ever are in need of a quick pitch to give to a company, look no further than our own research portal. So, and it's nice to see that each of the analysts and managers will sort of have their mark on the project, even past their legacy of the investment group and their time at Colgate.
Yeah, I just want to add something about the website. So I might have left out some of the pitches, might because your manager didn't share with the e-board in time, or maybe because of my careless mistake. But feel free to scroll through the website and see if any of your group's work is not on the page, and feel free to share them with me, and I will definitely add them up to the website as well. And I will just type in my email address in the chat box so you guys can send your work.
So with that said, I'd love to just open up to any questions or answer. After this session, we're going to be going directly into e-board elections. If you didn't apply and you've had a sudden change of heart and you're interested in applying, stay on the line. I think we have some room. Nobody applied to be the education chair, so we definitely need someone to fill that spot. So if you want to be part of the e-board, it's a very satisfying and rewarding position. Feel free to stay on the phone or on the Zoom. But with that said, if there's no more questions or comments, feel free to call it there, I think.
Thank you so much, everyone.
Thank you.
Thank
so
you.
much, everyone.